Hi, my name is John Sligh, and I'm a real estate agent with Edina Realty.
And my name is Luedtke, and I am a mortgage consultant with Edina Realty Mortgage.
Robin and I are here to talk about the real estate market and share some of our insights. Robin, what would you like to talk about first?
Well, I think a lot of I don't want to say fear, a lot of the thought for buyers is that prices have increased quite a bit over the last several years, and they're afraid that we're going to see some sort of a correction or an adjustment, or certainly, hopefully not a bubble. But what's your thought to that, and how do you make buyers feel at ease about that?
Well, what I'd say about the prices, I think, based on the experts, we're going to see a appreciation of at least 5.6% this next year, or this year, 2023. And the reason they think that is because we're still in a low inventory position. We only have just over 1 month supply of inventory, and a balanced market is about a 5 or 6 month supply. So as long as supply is low, prices are going to stay up, and people, luckily, we're back to a long-term average of 4 to 5%, which is a good thing. We're not in the crazy world we were in
during COVID,
yeah,
right?
During COVID.
Because we did see the prices go up a lot annually during COVID for those 2 or 3 years. And John and I are in Minnesota, so certainly nationally, there are definitely areas of the country that may have to worry about some sort of a correction. Those would be the areas that went up. Their values may have doubled over those few years of COVID. And we didn't see that much here in Minnesota. Midwest really just saw nice appreciation, but nothing crazy.
Right. So it's good. We're in the Midwest. We don't go crazy. We're conservative, but that's a good thing.
Yeah, that's a good thing.
And then I also would say that, people say, well, I'm going to wait for rates to go down. I'm going to wait for the prices to go down. But what they don't realize is they're losing out on all that appreciation. So if we are at a 4 to 5% appreciation over the next 3 years, the long-term average, if you bought a home today for $450,000, for example, in 3 years, that's going to be worth $521,000 at 5%.
That's a crazy number that I don't think buyers who are renting really can wrap their head around that number, because even if they think, oh, I'm going to wait and I'm going to save some money so I have a bigger down payment, maybe the interest rates will come down, but I don't think obviously most renters are not able to save $70,000 over 3 years. Most homeowners can't save the cash that fast. So really you're saying just get in the house now, build your wealth by that, even the 5% appreciation.
Right.
In a few years they will be so far ahead of where they would be if they sat it out and waited on the sidelines to try to buy at a future date.
Right. Yeah. And the appreciation, of course, doesn't take into account paying down your principal. So your equity would actually could possibly be more than that $70,000. So that's what I would say. And Robin, I don't know if you've noticed this, but rates have gone up a little bit the last couple of years.
Yeah. So really we saw rates double or more than double last year. So during 2022, rates did go up quite a bit. I mean, they were, kept at a very low rate that was not feasible to continue at that low interest rate for buyers. People were able to buy during that time. Great. They have terrific interest rates. But I know there's a lot of those people sitting in their houses at 3-4% thinking they don't want to move because they don't want to give up that great rate that they have, which makes perfect sense. And if your house is how you want it, terrific. But I know a lot of people just think, hey, I'm just going to put money into my house. I'm going to make it how I want. I'm going to remodel my kitchen. I'm going to do my bathrooms. I need to add another bedroom because our family is growing. Well, if someone is looking at making a huge improvement on their house, if they don't have the cash to do it, they're going to have to finance it. And what they don't understand is the rate on that loan, that home equity loan or line of credit, is going to be like 8 or 9%. So, if they're only looking to do a $50,000 remodel, great. That's probably a good option. But if they're thinking 150,000, they're knocking out walls, they're adding on some large project, then they have to look at how much do I owe on my loan currently at 4%, and then how much am I going to owe on a 9% interest rate? And does that really make sense? Or should we just go out, find the dream home, and even if that interest rate is higher for a while, just take that rate? Because really, when you combine those two rates, it doesn't always make sense.
Right, right. And then you can't fix location, you can't fix schools, things
Right,
like that.
right.
So there are a lot of lifestyle reasons why people want to move. And so I think you need to take everything into consideration before you spend a big amount of money. And financially, it might not make sense, but
Right.
also it's not going to fix your problem of
It's not
moving.
it's not going to put you in that school district you want. It's not going to, whatever the other reasons might be. And historically, John, 40% of home buyers every year are first-time home buyers. So they need to get into the market. As we talked about, they need to get in to get a house to appreciate, to start earning some real financial wealth. And with 40% of home buyers coming from renting, really no matter what the interest rate is that they're going to have on that mortgage to start with, rent is 100% interest, right? So all they're doing is paying their landlord's mortgage payment if you're renting. So as difficult as it is for people to hear a rate of 6, maybe we'll see 7%, it's better than paying your landlord's mortgage.
Right, right. And if it's a payment, maybe they're stretching a little bit, but the principal and interest at least will stay consistent. The taxes might go up
Right.
a little bit over time, but in 20 years, they're still going to be paying that same principal and interest payment.
Exactly.
So,
And they'll probably be able to afford to sell that home and move up to a bigger home
Right.
because of all that appreciation that they're going to be seeing.
right,
Yeah. I would say also, besides the current interest rates, that low inventory, as we talked about, is really makes it hard for buyers out there when they're looking to make an offer, because a home on the market, there's going to be typically several buyers making an offer. John and I are going to talk in our next video about how to best set the buyer up, and what tactics to use to be able to have their offer accepted, to have that seller look at their offer and know that it's better than any other offers that they've been given. And it's not always about the price. It's not always about, what price they're offering on the home. So watch for our next video, because we're going to talk to you about that.
great. Thanks, Robin. My name's John Sligh again. You can reach me at johnsligh.com.
And you can reach me on my cell, 612-306-5925.
All right. Thanks for listening.
Thank you so much. Bye-bye.